Good morning and welcome to Trading with Larry. I'm joined by Clint Brewer, Larry's right-hand analyst. How are you, Clint? Good morning.
Good morning. Good to be here again.
Good to see you again. Good. So another day. We're stuck in a range. Nothing doing. We're knee deep in earnings season. Maybe earnings season is going to finally get some movement in this market, and maybe that happens as early as tonight. Um, There's been talk about Powell exiting the Fed, and maybe that's causing a little bit of an up and down. Larry, now it's Larry. How are you, Larry? Where'd you come from? I think we're having some technical difficulty. Larry, can you hear us? No, it's Clint. How's it going?
Good. Larry's having mic issues, so I'm here for now until unless Larry can get his mic issues solved to be able to hear everyone.
All right, all right. That's just as good. So as I was saying, the market just seems to be stuck. And maybe earnings season is something that's going to get us out of this extreme range bound kind of trade. The only kind of consistent that I've been finding consistent um, trading strategy has been these iron condors that we're selling almost every single day. And Larry and I were talking about that yesterday. And it's weird because the straddles are priced so low going into the trading day as is, and yet they still tend to expire worthless, which is has been kind of a stunning development. I don't think I've ever seen that. You're going to have at least a couple of days where the range in the market is bigger than implied, and we just haven't seen that. And maybe earnings season starts to get us out of that and gets us some real trading. I was talking to Larry earlier in the morning, and the first thing he was lamenting about was there's no trading. It's like there's no volatility. Um, it's a little bit more difficult to make big money. You can still make consistent money if you're selling credit spreads and selling options every day. Maybe earnings season gets us out of this. Um, what do you think about this earnings season? Do you think this is kind of a do or die for these high valued Nasdaq stocks, or do you think?
No, I do. I mean, look, I think two things. One, you're just kind of in the summer doldrums right now for trading. So you're seeing really low volatility. You're not getting paid much to take risk. We've been looking at. I mean, I've been with Larry and Thomas on the phone every day for the past week, looking at spread trades, mostly put spreads, and there's just you're not getting paid much to take on risk right now. So it is ending favorably when you don't get a big move during the day. We've been seeing relatively muted reactions, or we've been seeing the market holding in okay, which is nice. I mean, especially if you're writing a put spread, but still the compensation's not really been there. But it's still been working because of the muted volatility. But yeah, I think we're entering a period that actually you start to see. We talk about S&P 500 seasonality a lot. We're entering a period where VIX seasonality picks up. So VIX seasonality, the which VIX is implied volatility on the S&P 500. So it's just a broad way to look at what the market thinks volatility is going to look like over the next 30 days for the S&P 500, and that tends to pull back and hit its low point into midsummer, and it starts to pick up from here. So I think that's worth keeping in the back of your mind, is that we start to see VIX turn up, especially heading into August. And yeah, maybe earnings is the catalyst that gets us there, because one interesting thing I was looking at the other day is that you still need the Mag 7, the Magnificent 7, to carry this market. So for the second quarter, right now, for the second quarter, the Mag 7 is projected to see earnings growth collectively of just over 14%. The other 493 companies, just 3.4%. So I think if you are going to see volatility, you might have to wait for some of the Mag 7 earnings to roll around, because they're the ones that are really still to this day underpinning the earnings growth in this market. They've been a huge driver for the last couple of years now, and they're still expected to be a huge driver. And so I think if you're going to see some real volatility emerge, look to see if there's any any doubt, any concerns around some of these Mag 7 names, because they're the ones still driving the growth at this point. And so I would, I think we have a couple of those lined up this week, and that's who I would look to.
It's interesting you mentioned seasonality. As you were saying that, it reminded me of last year. I think seasonality, it was like the perfect seasonality in midsummer. Like you mentioned, late July is when you get some hiccups in the market. The VIX starts to go up. Last summer, it was like perfect. You had a lot of recalibration, kind of what you see right now, and then like in mid July, and then by the end of July, you had the Japanese carry trade blow up. All right, so it was kind of like a perfect seasonal setup.
Have you been watching that? Are we going to get a replay? Are we going to get an exact replay of last summer? Are we going to have another Japanese carry trade
I
blow
don't
up? I
think
know yields have been jumping on Japanese government bonds, and it's kind of flying under the radar right now. Just it's kind of interesting how that lines up with where we're at right now. Because I think literally July 24th last year was the peak in the S&P 500, and then the
right.
whole yeah.
No, I think if we see anything over there, I think it might be in October, when they're actually planning to do something with rates in October. In general, I just think the market is going to kind of have a comeback to Jesus moment at the end of the year. I'm still of the mind that CPI is going to start to um, show what we're seeing on the ground, which is higher inflation. The lag effects that we've been talking about, and I think as soon as the market sees that, and as soon as they realize the Fed isn't going to be able to cut rates like they think they are, that's when maybe we get volatility. But I don't know. It just doesn't feel like we're going to get a big vol shock this summer. But maybe I'm wrong. I don't know. If you ask Larry, he'll tell you I'm really wrong.
Yeah, I don't know. I think I'm in Larry's camp on that one. I think you see I do think the catalyst is correct. I think you see a market reaction to inflation that is also linked to rates. I think the market needs to reprice, and the market is repricing the rate outlook, especially following the inflation reports last week. And I think if you get 1 or 2 months or the next couple months of inflation moving in the wrong direction, I think that could definitely be a spark to see an increase in volatility and some downside in the market that comes just on time with some August, September, with historically bearish seasonality there. So again, it's good to have the seasonality aspect in mind. I wouldn't trade on seasonality alone, but you think about, hey, what's the catalyst that can move us? And no one's talking about this. No one's talking about the inflation reports last week. No one's talking about the market reaction around inflation reports. I look at it as kind of sort of a scarcity asset trade that's working right now. And the latest mover you had was gold yesterday. Gold looks like it's moving out of a 3-month consolidation pattern where it's been grinding sideways, but that trading range has been getting tighter and tighter. Now it's starting to move above. Well, gold has a high inflation beta. Copper has a high inflation beta. Copper was breaking out a couple weeks ago.
Which one do you think has the biggest inflation beta out of the commodities?
I would just say commodity. Like I know copper's highly correlated to long-term inflation expectations. Which, by the way, look at 10-year break-even rates. They've been jumping recently. That's like no surprise given what you've seen with copper. And so you have the market is just everyone's focusing on the stock market, and it's been on some of these high beta names. It's been easy to trade. You've had big moves in more speculative areas of the market, and I feel like everyone's just completely enamored with that right now. Meanwhile, they're ignoring all these areas that are sounding the warning alarm on inflation. All these, you don't have to wait for inflation reports to come out. Look at what these market-based indicators are already doing, and they're
Yeah,
moving higher.
and as you say that, I'll pull up this chart here that's probably off everybody's radar, but I think fits into what you're talking about. These are live cattle and lean hog prices. They're I've heard live cattle now being called the new eggs, which is meat prices. So live
It's
cattle
going
up
to make
here,
sense.
lean hogs down here. These things are trending up in a pretty big way, and yeah, that's something I think nobody's really even looking at.
Yeah, so I mean that's just another area. I think you can look at the whole commodities complex in general. I think before we've talked about whether it's the CRB index or I like to follow the S&P GSCI, which again these are just broad commodity indices. And these things have just been grinding sideways for 3 years now, while we've been in this we call it disinflation trend since mid 2022. And they're all with what you're seeing, and copper's kind of an early mover, gold's moving, silver's moving. You're seeing, so now you're starting to see these broad commodity indexes really close to taking out the high end of these ranges over from the past several years. And at the same time, longer term inflation break even rates are breaking out. So again, this all tells me that we're seeing this inflection higher in inflation, and it's only going to get worse in the months ahead. And no one really talked about if you start to peel back the layers of the CPI report, there last week, there is clear indications that tariff-driven inflation is creeping into those numbers.
Yep.
So areas like I think like sports equipment and household furnishings. If you look at the overall like core goods inflation and what it did on a month-to-month basis, they had the biggest month-to-month gain since mid 22. Well, mid 22 CPI was at 9%. So what does that tell you? That's before all this new August 1st round stuff goes into effect. Like this is just the early stuff that went into effect, like the 10% baseline tariff, maybe some of the stuff on autos. This doesn't reflect anything that could go into effect here in the next week or so.
Yeah, you mentioned a couple years back. What was it? I think 20. When did we see peak inflation? That was
It was June 2022.
what? It was in January 2022
June
or June?
June was mid month or mid year.
Mid-year. Yeah, it was mid-year. Yeah, by the time we saw peak inflation, commodities as an index were already kind of tobogganing down. So, not to beat a dead horse, but I'm just looking at the board right now. Gold is kind of moving. You mentioned gold before. Gold is has recovered nicely this morning from overnight lows, and I wonder if it's because of Fed Chair Powell's statements. I'm not sure exactly what he said here.
I've not seen the headlines. Yeah, I do know he was speaking this morning.
It looks like that's kind of moving things around in gold a little bit. But you know what's kind of unfortunate in commodities? Like people probably hear us talk about commodities. They're like, "Well, how do I invest in it?" And the first thing they go to is like an ETF. But then you have to figure out, okay, do I want to be long oil? Long oil? Do I want to be long gold? Right? Do I want the broad-based index? You buy these ETFs and you kind of sit in them and you look and commodity prices go up, but the ETF doesn't go up a lot. And you're like, what is this? Like, what am I investing in? And there's a lot of nuance in commodities. They're all futures based, and you have a lot of decay in the roll. Uh, Investors get penalized for that negative roll yield, which I won't get too deep into. But is like, what is the best way do you think that people should invest in commodities? 'Cause I don't think it's an ETF.
Yeah, I mean, So one other thing that you need to be really cautious about when you take the commodity trade via an ETF is that a lot of those ETFs are structured as partnerships, and so you're they're taxed differently. So you could get a K1 come tax time, which even with a K1, depending on the circumstances, you could still have a taxable event even in a retirement account. So I'm not a tax expert. You should consult your tax expert if you're looking into those. But that's one other thing to be aware of if you're looking at an ETF for this commodity trade. So if I'm looking to play the commodity trade via an ETF, there are K1 free securities out there. I think Invesco has one. I can't recall the ticker off the top of my head. But I think ETF, if you don't want to trade a futures contract, I think ETFs probably still offer the best route for someone to
Well,
get
that's my
these.
point. A lot of these ETFs are futures based, and if you're holding them long term, it just doesn't like even like What I'm saying is the commodities index could go up 10%, but the ETF that you're holding, I mean, there's a few of them will only go up like 2 or 3% during the same time because they're holding futures and because they're constantly rolling them.
Yeah.
So it's a little bit difficult. I personally think people want a good inflation hedge when it comes to commodities. Uh, Gold is as good as anything, right? And so I think that's probably for investors for the long term, probably the best kind of commodities exposure that they should get, and just kind of keep it simple. I'm noticing a lot of interesting things in crypto right now. And you kind of look at the board. Coinbase is up this morning. Circle is down. I think that the market is slowly starting to realize that there's some relative value between those two. I think Circle is a major short against Coinbase, even though Coinbase itself is definitely overbought here. But in terms of which one is going to fall harder, probably Circle. But within crypto, I'm just seeing even in crypto, I'm seeing a lot of recalibration and rotation. It's like crypto learned from the traditional market to rotate. And like, I talk to like old school traders like Larry sometimes, and they're like, why does the market always have to rotate? Like why? Like they don't get it. I don't get it either. I could I could tell them, well, what I think is happening is because there's so much data now available, and there's so much capability within financial institutions to go through tons of data and pick out these relative value opportunities as they come available, where in the past it would take much longer to identify relative value. So because like everything is robotic now and algorithmically driven, all these relative value opportunities are found in lightning speed. So that causes more rotation more frequently than in the past. But even like in crypto, you're seeing it. Like Bitcoin is up today after not being able to go up for like a few days, with altcoins just ripping higher. Now all the altcoins are down and Bitcoin is higher, and you're seeing it in the crypto related stocks. So
What
I
what so you're more tuned into crypto than I am. I follow Bitcoin and maybe Ethereum loosely, but that's about it. Like what are if you're kind of a Bitcoin novice, like should you even pay attention to these altcoins, or is it just an area where you're going to get burned? And is there even like I understand the use case for Bitcoin and maybe Ethereum? Like, is there like what if you're looking at an altcoin, like what should you even be looking at?
if you're a novice getting into this, I would say forget the charts, forget how many millions of dollars everybody's making. Right, forget about all that. There's Bitcoin, which is a one of one. That you have to remember. All these altcoins, they could be gone tomorrow. but Bitcoin won't because it's a one-on-one. So that sets Bitcoin apart from all of them. So that's number one. Number two, always know and just write it on the wall next to your trading desk or whatever it is. After a big move, if you're thinking about getting into an altcoin, you're probably going to lose money. It's always the case. Even this weekend, I had a few of my friends kind of have a conversation with me about altcoins. These are people that never traded Ethereum, and they're like, Ethereum is great. I got to get into Ethereum. I'm like, where were you 2 months ago? And I was telling you to buy Bitcoin. They're like, no, no, I'm not talking. I'm talking about Ethereum. I'm like, oh my god, okay. So it's one of those things where the FOMO in altcoins is, I think, much more pronounced than in anything else. There's after a big move, you want to get into altcoins when they're crushed. You don't want to get into them when they're trending up. They will, and you don't. They will stop you out, right? Uh,
Don't try to buy the breakout or ride the momentum. Like that's the time to get out.
you have to go counter trend with altcoins to make money. I think you have to wait until and it's painful because once it trends, it's like, oh my god, everybody's making money on it. But like just this weekend, like I said, I had conversations with people. They got bullish, and this whole week altcoins can't do anything. You know, so it's something that you want to kind of think differently than everyone else. But I would really understand, like, if somebody's a novice, I would try to understand how stable coins are going to help the financial industry, the traditional financial industry. That I would try to get into, and the platform that they seem to be wanting to use mostly is Ethereum. So you kind of have to, I think, know what Ethereum is at this point, right? And obviously Bitcoin. But there's some other ones that I would stay away from. The ones that are more hype than substance. But there's a couple of them that actually have substance. I think Chainlink is one of them. Obviously Ethereum, which is going to be a big platform for stable coins, and just understanding what stable coins are and how that's going to help the financial industry.
Let me ask you this then. So, all right, for someone that just doesn't want to have to go through the hassle of setting up any sort of an account to trade crypto, you mentioned stable coins, and there's been a ton of headlines around stable coins lately, whether it's big banks offering their own version of a stable coin or some of the recent legislation that's making its way through Congress. For someone interested in that segment of the market, do you think there? So the comparison I would draw is this: when we talk about the AI trade, I talked about wanting to play it a little bit safer by looking at pick and shovel trades like HVAC companies that have to feed into these data centers. Is there a safer, not maybe not safer is the right word, is there a better way for someone interested in the crypto and stablecoin area to get exposure to that by trading an equity, a stock that's making some inroads there? Not, it doesn't even have to be like a
They're
circle.
all they're all like they've all ripped already. Like I would just say Coinbase. I would even say Circle if it was trading at like $30 a share or even $50 a share. I would even say that. Um, you I hate to say it, but everybody's kind of late to the party right now. Right at this very second, I think everybody's late to the party. But I also think that once we get a dip in Coinbase, it's going to become a big buy again. How big of a dip am I looking for? I kind of I don't know. I get into a trade. I don't like. I know like a lot of people have a price target and they get into a trade. I get into a trade and I don't know if it's going to be a big trade or a small trade. So with Coinbase, like right now, I'm bullish on Coinbase, but I'm not bullish about this price level here. So like I have call spreads out for Friday for Coinbase. I have a 445 call spread. So I'm hoping Coinbase trades below 445 by
It
Friday. But I'm thinking,
expires on Friday.
what was that?
It expires on Friday.
It expires on Friday.
Yeah.
So I'm thinking the first dip, like to answer your question, I would say Coinbase. I would say a company like that, which is kind of like a picks and shovel play, the way that you're referencing to a certain extent, because they're facilitating a lot of this, right? They're the exchange, so but not at these price levels.
Yeah, I
Everything,
was going to say that. I feel, yeah. I mean, what do they talk about? It's a lockout market, where things have moved so much that it would be kind of crazy to buy at these levels. I mean, I'm looking at Coinbase and it's at $413 a share. It's going from 150 to $413, and since the early April lows have been in. I mean, it's just been a straight shot higher. And if you're, yeah, maybe the tailwinds are there longer term, but I mean, it would be. I could not buy in at these levels. I would not be taking a trade at these levels. Maybe like you said, maybe if you have a call spread or something, kind of playing a mean reversion move off the upside. But there's been such huge moves across the entire space, and now's the time when everyone's getting interested in them. And now it's probably the exact wrong time to be starting new positions.
yeah. You know, the market here is just very odd to me this morning. It looked like we were gonna have a little bit of a dip, and we're just like right back. Volatility is back
Well,
down.
I haven't seen what was in Powell's speech, but I do know right before I came on there was a little bit of a Powell taco trade going on where uh, Besant was saying he could just finish out his term if he wants. He seemed to be backing off the demands that Powell resigned. So maybe that has something to do with it. Just I wish Larry was on to talk about the latest taco, but that's what I
I'm
saw before I
just
hopped on.
saying the end of the year is gonna be like this year's is kind of like is gonna have Shakespearean irony to it because this is exactly what happened in 2018, but like on steroids. Because now Powell is gonna be exiting. And at the end of the year, it's going to be a big Powell versus Trump because we're going to have, right, if you and I are saying inflation is going to creep up into the CPI, how are they going to cut rates, right? They can't cut rates into higher inflation. If we see higher inflation, they're probably not going to cut rates. So Powell is going to say that, and Trump is going to go ballistic, and right, and it's going to be
Yeah,
like must watch financial TV, I guess.
it's already being repriced. I mean, September. The consensus it seemed like was that September would be a rate cut for the Fed's meeting in September, and that's now a coin flip. It's not. Last time I looked, the odds were about 50-50 for a September cut. And I think if you get one, we're going to get a couple more inflation reports before then. I think if you keep seeing inflation inflect higher a little bit, and the labor market hold in where it's at, I think it's impossible for them to cut. And it's just going to set the stage, yeah, for an even bigger battle between Trump and Powell, which really sets the stage for his term to end in May next year. I mean, that's arguably Powell. The Fed chair position is the most important position in the world when it comes to the economy, and that's a ways off still. But there's going to be a lot of angst across the stock market if it looks like that position is going to be compromised in some way, shape, or form as we look into his replacement.
Do you think the Fed is necessary?
I've seen that question being tossed around a little bit lately, and I would say no. I would say it's not
And
necessary.
I would agree.
I would say because look, let the market set the rate. Like the 2 year, if
Yes.
you want to know where the Fed's going with interest rates, follow the 2 year Treasury yield. All right, the 2 year moves before the Fed moves. Like you'll get a more efficient pricing of short term rates if you were to just let the 2 year do its job because they always end up following the 2 year anyway. And so yeah, just let the market set the rate.
So it's interesting you say that. The 2 year is at 3.83 right now. And the Fed funds is what, 4.3?
Yeah, the range is 4.25 to 4.5. Yeah.
Right. So the 2 year is anticipating a 50-point cut this year.
Which
Yeah.
is kind of around where it has been. Um,
But that doesn't mean that the 2 year is right. Also, the bond market
the two
is
the 2 year is gonna the 2 year is gonna change and evolve to what's happening with the underlying economy.
uh, I just to continue about the fact I think what they do, and this could come from a complete place of ignorance about exactly what they do, but from what I understand, I think that most of what they do can not only be done by an algo, but probably greatly improve their results if completely automated by AI or some algo. In terms of setting rates, setting monetary policy, um, in terms of open market operations, buying and selling treasuries on the open market on a daily basis, this could all be done by an algo, I think, and probably improved because it would be more objective. You would get, you could probably put in more um, high frequency inflation data, which would have greatly improved when they were raising rates and cutting rates, the timing of it. So yeah, I'm with you on that. This morning, what do we got here? 20-point straddle again. Again, a 20-point straddle. I don't think we have any big earnings tonight, right? Maybe
I
Texas Instruments.
Yeah, I don't think there's anything that's really going to be too market moving tonight.
When's the first Mag 7 coming out? Thursday?
So I know Tesla and Google are on Wednesday after the close.
That's on,
So maybe we'll have to wait till Thursday morning to start to see.
oh, they're coming out tomorrow night, you're saying?
Yeah, tomorrow after the close. Yeah,
Interesting. Okay. Any thoughts on Tesla?
I you know I would say I was actually just looking at Tesla, because I want to talk about maybe some current setups that we can watch heading into earnings season. And if you are a call it like pattern trader, if you like to look at the charts, um, you can maybe wait for Tesla just to tip which way it wants to go here because if you look at especially since the end of May, Tesla's been coiling pretty tight. I mean, if you just these up and down ranges has been getting tighter and tighter. So it's been capped at around 370 on the upside and about 280 on the downside, and it's been getting tighter and tighter in that range. And so, one thing you could watch instead of trying to guess which way Tesla is going to break, you could draw trend lines and wait for the break to actually happen itself, and maybe earnings. I don't know if you want to do anything ahead of earnings tomorrow night, but earnings could be the catalyst that makes it move. So I think Tesla is
How
definitely.
much do you think it's going to move on the report?
I don't know. You can. I don't have the options up in
Let's say
front
like
of me,
this.
but
Is it going to be closer to 5% or is it going to be closer to 10%?
I would say it's probably that's a good range. I would say for Tesla, I would say it's closer to the 10%. There are so many freaking headlines around Tesla and Elon Musk right now. It's just he is such a polarizing figure that the stock, even though it's a huge market cap, I mean, the stock price has become so sensitive, and you've seen it as we've traded in this range. I mean, you have these, just look at how it's traded in the last couple of months. I mean, you've had these huge 1 day reversals. I don't know if they've happened on news or not, but now we actually will get some news on earnings. But that just given Musk's profile in the media and the headlines is enough to move the stock around. And now you're going to get earnings on top of it. I think you can see an outsized move in Tesla. Now
Options market,
watch we'll end Thursday flat.
yeah, options market is skewed to the upside from what I see. So like Tesla's trading where 330. So let's take like 20 points up and down for August 15th. Options on Tesla. $12 on the calls for 350 call August 15th. And a 310 put is only 1075. So the calls 20 points up are trading higher than the puts 20 points down for August 15th. So it seems like there's some skew to the upside here. I'm not sure. I'm not sure whether we make a move above or below that. Maybe it's a. I don't know. I hate to say it, but maybe that's a good iron condor to trade here.
Yeah, do your own Condor. I would say just wait for that range to break. I mean, you can maybe we can write about this in Larry's e-letter this week, but I would look at that range and wait for that range to break, and maybe earnings as a catalyst.
Yeah, so that's coming up tomorrow after the close. You're saying, right? So that's gonna be a must watch. Do you notice that in earnings season, like the stock indices kind of start out very choppy, very lots of fake outs, and that kind of continues, and then that actually accelerates as Mag sevens come in. You get much bigger fake outs, and then like towards the end of the earnings season, the market kind of picks a trend and starts to get out of it. Do you notice this pattern, or am I
Yeah, I do, and I mean it shouldn't be too surprising too, because I mean look, the Mag sevens like 30% or more, 40% of somewhere around of the S&P 500. I mean they're I know that the top we wrote about this recently. Like the top 10 stocks in the S&P 500 are now at a record share. So never before has the top 10 accounted for a larger share of the S&P. I mean, you had Nvidia crossing a $4 trillion market cap. That made Nvidia alone 8% of the index. You have to go back to IBM in 1969 to find the last time a stock made up that much of the index. And here's the other thing. Here's the other thing of why maybe we start to see some more volatility injected in this earnings season is that when you look at the top 10 stocks in the S&P 500, their forward PE ratio, so the PE ratio based on earnings expected 12 months out, is higher than what it was at the peak of the tech bubble in 2000 or the internet bubble in 2000. So again, the top 10 stocks in the S&P 500, their forward PEs are higher than they were for the top 10 in the S&P at the height of the internet bubble. So you want to use the term price for perfection. Those stocks, those Mag 7, those top 10 stocks are priced for perfection. And
Yeah,
so, yeah,
these earnings better. All these AI stocks, not just Mag sevens, but I think there's been a lot of um, a lot of hope build up into the non Mag seven AI related stocks as well. They better put up, right? These valuations are bubble territory here on the Nasdaq, which I think is actually okay if earnings justify it, because the market's always going to change. Like I don't really care as much about P ratio unless it gets to an extreme. I think like at an extreme is where that stuff tends to matter. And not even on a stock like in an individual stock basis, like on an index basis, I think it works much better to trade the PEs like in a band. Yeah, but right now it's bubble territory, right? We've seen these levels only in bubble territory, and to your point about um, the Mag Sevens not having these kinds of relative market caps, have you seen the Buffett indicator recently? That
Yeah, I've seen some around that. That's what's the Buffett indicator?
that's
That's
the
market
market
cap to
cap.
GDP, right?
Yeah, yeah. So market cap of the entire U.S. stock market to GDP. So one index that people use for that is the Wilshire 5000 to GDP, and that chart looks scary to me. I mean, it's like over 200% now, where the market cap to GDP is like two times more. So I think I don't think Berkshire Hathaway is on a buying spree right now.
No, absolutely not. No, but that's the thing though too. It's like, but it's been in bubble territory for a while. It's like when do valuations actually start to matter? It's not until with hindsight that you can say, oh, there was the top, and that's when investors finally started to care about valuations. I mean, the market's not too far off its highs from where we were back in February, and valuations, apparently didn't matter back then either because we're at new highs now.
But if you think about it, like and I agree with you, right? As a trader, you do not look at this stuff, right? We're not talking about. We're just talking about maybe longer term investing. From a trading point of view, I'm not looking at the Buffett indicator.
Yeah,
Neither is Larry, right? We're not looking at that. But I mean, that's market cap to GDP. Like, where are these companies getting their revenue, income from? They're getting it from the U.S. economy, right? From the GDP. And these companies, well, the entire stock market is 2x that, more than 2x the actual economy. That's a crazy thing. Like, why is the market comfortable with this? Maybe it's a philosophical question. I don't know, but the market seems to be very comfortable with the fact that these companies are just, they're kind of detached from the GDP, the economy. It feels weird.
it won't matter till it does matter, and no one cares. And all of a sudden, whether it's just like in why did the market make a top in March of 2000, or why did the market make a top in October of 2007? Like it just
Yeah,
at some point it will matter, and
and it usually happens when it usually, like, people usually start to think about these things once there's some sort of macro shock to the system. Without the macro shock, they just don't care. The trend continues, the music keeps playing. You mentioned PE. I'm looking at healthcare. Uh, like, what's going on in healthcare? Like that one, you talk about PE. That one has like the lowest PE. Tech has the highest, followed by consumer discretionary. Then you have industrials. Um, Healthcare is like all the way down uh, at probably the lowest. What's going on in healthcare? Why is this in such
I,
a?
I'll be honest, I don't follow the sector that closely. I don't know if it's a reaction to make America healthy again. I don't know. I don't know if they're what the catalyst is behind the healthcare trade right now, unless it's
Yeah, me neither. But it's. I think it's at this point kind of worth looking at a little bit.
I think if I'm looking at a low PE sector from a longer term holding standpoint, I'm probably looking at the energy sector. I know XLE, is the energy sector ETF. There's several out there, but I know, yeah, with the pullback in healthcare, they might be the cheapest sector now. But I know based on forward earnings, energy's been one of the fairly cheap sectors out there. And just given where we are in the cycle and given what we've talked about with commodities, if I was to park my money, looking out 12 months plus, I would probably look at energy sector right now.
Yeah, I'm gonna pop up a chart of of both of these, actually. But take a look at this XLV. The XLV ETF, that's the healthcare ETF. Look at this downtrend in this thing. That's pretty deep. That's a deep downtrend. So yeah, we have a bull market. We have a bull market in the S&P, but not every sector is participating here. So this is XLV, and then here's XLE, which you mentioned. Much better trend. Yeah, this one looks. You think that that 200-day hold? Do you think these technical areas are going to hold here? You think oil is the long here? I think is the better
Yeah, I
question.
think you have to think about oil as a long if you're comfortable holding XLE long term. And yeah, oil. I think oil is usually one of the last to go, right? I mean, if you kind of look at how the dominoes fall with commodity prices as you get later into the cycle, um, oil prices are usually one of the last to break out. I mean, oil prices made their peak in June of 2008. When you look back at that cycle, I mean, we were on our way down at that point in the S&P 500. Yet oil prices and energy stocks were going through the roof. And I think with how the dominoes are falling with commodity prices right now, I think yeah, you can you can see that move in oil to the upside. You would need to see that move in oil to the upside to get some of these commodity indexes to break out, like we talked about. So I think yeah, that's one area I would be looking at for longer term hold. I think that could be the next one to go on the commodity space.
All right, so we're getting close to the open. We have a 20-point straddle, which is nothing. Once again, very low. Um, the market looked a little bit overbought yesterday. Fell in the Asian session, came back up right into today's open. 20-point straddle. What are you guys putting on today for the opportunistic trader?
Pretty consistently over the last week or so, we've been looking at put spreads. So selling of
No way, Larry selling put spreads? Get out of here.
yeah, we're selling put spreads. I think
Good for him.
we did a call spread at the end of the week last week, but for the most part, most of the spread trades have been put spreads because yeah, I mean, why don't fight the trend, Eric? If you're,
Good for
but
him. You good
that's
for him.
we had we didn't do much last week just because you're not getting paid much to take risk. But we had a really nice week the week before that, and yeah, again, a lot of it was on the put spread side. So you're collecting it's a credit trade, and you're betting that the market's not going to fall beyond a certain point when you're doing those.
Yeah. One of the hallmarks of a great trader is you have when the market is doing something opposite than what your opinion is, and you still find a way to make money. So, as a litmus test for you guys at home, if you're a trader and you want to know, am I legit? Have I made it? Do I know what I'm doing? At some point, when your opinion doesn't match the market and you're still making money, that's when you kind of know. So I feel like that with Larry.
That's Larry in a nutshell.
That's yeah, he's been bearish out of his mind, but somehow he's been trading well, and that's well, he's a market wizard, right? What can we say? It's like I'm watching basketball with my kid, and the guy does a beautiful dunk, and my kid is like, "Did you see that?" And I go, "Well, he's in the NBA," and my kid is like, "What?" And that's like Larry, right? He's a trader, right? So that's how you know if you know what you're doing is when your opinion doesn't match the market and you still make money.
Yep.
I think that's the ultimate litmus test. I hate to say it, but you know, I was slightly bearish yesterday. Kind of positioned short into today. I think somehow I'm making money on gold. Gold has been really saving my butt over the last couple of days. Not been trading the index that well, other than these iron condors. Which I think actually could be another good one today. It's incredible, but I think the setup is there for yet another one where you're selling out of the money. Now, what do we get for those? Well, the market is probably going to be set to open at around 63.10 on the cash. You have a 20-point straddle. That's not something I'd be comfortable with. But a straddle 25 points, an iron condor 25 points out in both directions gets you about 250 for a 10-point spread. That's not that bad. But I'm going to have to put that on like right at 9:30 if I want that premium.
Yeah,
Because within like 30 minutes, all that premium is gone when volatility
right.
is low, which is really frustrating. Because sometimes you get a signal, you don't get a signal on the market within the first 30 minutes. Like who trades the first 30 minutes? Like usually institutions don't trade the open. They'll trade later. They won't trade the open. So by the time I get a signal, it's very seldom that it's right at the open. But the problem is if I get a signal an hour into the market, all the premiums out and I start having to get
Because
extra.
you're trading an expiration of that same day, right? Like
Yes, early.
so
Yes.
you're that time decay. As soon as the market opens, that time decay starts ticking off right away.
Yeah. So what I'm doing, and Larry mentioned this on the podcast yesterday. I'm reaching out, like when I get a signal, like if it's in the middle of the day, I'm just reaching out into the 1 or 2 DTE expiry to just get premium. That's where we're at in the market. It's kind of slim pickings here.
I think once we start to get into Mag 7 earnings season, that'll start to change.
I hope so. I hope so. So it's 9:22. I'll give you the last word. What do you think?
Yeah, what I just said. Wait for Mag 7 earnings season to roll around. We're kind of in a dead zone for volatility right now. That kind of lines up with what you see on the year. But from here on out, over the next couple months, it starts to pick up, and I would look toward Tesla and Google earnings after the close tomorrow to really start to kick that off.
So less is more. Is that what right now? Less is more in
Right
the
now,
market.
this is more,
Less
but
is more. Yeah,
prepare for that to change.
I agree with you. Good talking to you, Clint. As always, have a great rest of your day, and I hope everybody else has a great rest of their day as well. Take care.